All right, traders, this is Blake Morrow. You are listening to the Daily Roundup webinar. Hope everybody's having a great trading session. I'll tell you what, if you're trading the Aussie on the short side, it's a little frustrating. I'll tell you that much. And probably if you're trading the S&P too on the short side. The S&P is approaching, let's take a quick look at actually the equity markets here. The S&P is approaching the spike low from the end of February. So that level came in at, let me move this over just a bit, just so you can see it. So that low, as you can see here, it came in at 28.53. Currently, we trade at 28.32. So if you think about where we can stretch to meet the lower end of that, of the resistance zone, that's about another 30 points or 20 points from current levels. So, and think about that as we reach for new highs. The NASDAQ 100 is above the 618 retracement, and it continues to blast higher. The NASDAQ's continuing higher. Obviously, we're overbought. From an intraday standpoint, the 4-hour RSI is divergent at this moment and still reaching, but we can go higher. I mean, if you look at RSI, we can still move up higher, and we've been higher in the past. So don't discount that. The Dow, struggling a little bit more. We're at the 50% retracement and kind of knocking our head up against that the levels from a couple of days ago. Also note that the bottom of the resistance zone comes in 24,500 basically, which is another 600 points from where we're currently at. So if you think about it, the S&P can still stretch its legs a little bit. The NASDAQ probably can too, and therefore the Dow could quite possibly as well. So if you don't think that new highs are possible from here, they are. We're just getting pretty close, in my opinion, to an inflection point. As I noted on Twitter, which I haven't been tweeting a whole lot, and if you guys understand why I'm not tweeting a whole lot, currencies are really, really challenging at the moment. For those of you that are not aware, we're going at the end of the month. We're going to be doing a big event called Trader Summit, and it's going to be free, and we have a lot of speakers, and it's going to be a pretty neat event. I'm actually going to be speaking, for about 45 minutes for this event, and my topic, just so you guys know, is about the dollar and about how challenging it's been and the arguments for a bullish and a bearish dollar moving forward, and see if we can identify some longer term trends as a result. But I've found the FX market, especially if you're trading the dollar, to be extremely challenging as of late, because the dollar is being pulled in a couple of different directions. And so its trend is not super definitive right now. What I will tell you is the Aussie's knocking its head right up against resistance, and as you can see, this is the previous support from back in February as well. We're knocking our head up against that really key 64.20, 64.50 area. Keep in mind that the 618 retracement of the full move from highs back in December of last year to the lows, that comes in around 64.50. So we are obviously at an inflection point. You can see the Aussies, struggling to keep up with risk appetite. As stocks move higher, the Aussie is, just kind of, if you hear my trash truck, the timing couldn't be better with the trash truck. Here it is, right in front of my house. We're knocking our head up against resistance. And what I was trying to say is that you can see it's struggling with equities moving higher, the Aussies struggling to make, to make great gains. I mean, you can see just if you look at the candles, and actually if you go over to the daily candles, you can see that we're in the 7th up day, kind of like this last leg higher, 7th up day, and momentum's lagging a little bit as relative strength is overbought. Still remaining overbought, but still, we're knocking our head up against, like I said, key resistance. The currency pair that I really want to focus on at this moment is going to be the dollar Canadian. The dollar Canadian, with stocks moving higher, the dollar Canadian should be moving lower. However, there's more to it than just that. If you think about where crude's at, and crude oil is extremely weak, we're near $21 a barrel. We're almost, about ready to drop below $21 a barrel. And the lows are at 19. But with crude as weak as it is, it's going to have a very big impact on the Canadian economy. The Canadian exports of crude has increased from what I was reading. I was reading a research report, has increased this year, and as a percent of GDP, and that's bad as crude is moving lower. So the Canadian economy is specifically going to be negatively impacted. And you saw the jobs report out of Canada, which was horrendous a couple of last week on Friday. What I'm watching for at the dollar Canadian is this 139.25 level, and it's a big, in my opinion, big level of resistance. Let me get rid of this. Actually, I'm gonna make this straight, so just bear with me. Here is where I want it. It's a little lower than that at 2020, but I want it to be above today's highs. And let me go ahead and put an alarm on that, just in case I'm not in front of my computer. I think this is an important resistance. The only way the dollar Canadian is really going to start moving higher, though, is you're going to have to see stocks move lower. I think that's the missing component with the dollar Canadian. That doesn't mean it can't move higher, but I think in order for it to break 140, we're going to need to see the stock market actually start to show some selling at some point, whether it's today or tomorrow or whatever. That's going to be the catalyst, in my opinion, that drives the dollar Canadian higher. But the dollar Canadian, I think, is at risk for a rally. And I'm watching it very carefully, and I'm watching it very closely. Some of the guys in the chat room, they look at this. If you look at the hourly chart, and you'll notice this moving average, it's the 48 exponential moving average. Okay, right here. It's this like blue or whatever color. The late Captain Ron, who was in our chat room for many years and beloved trader that was with us, he passed a couple years back. He used to use the 48E quite a bit intraday, and still a lot of the traders in our chat room reference that 48E, and you can see how we're knocking our head up against it, and we're failing to get above it. A close above that and a close above this 139, let's call it 139.30 level, in my opinion, intraday would be pretty bullish. Now that's one of the cues that I'm looking for, for dollar Canadian possible longs, but I'm actually looking at that for, to cue me about Aussie dollar weakness and maybe even equity market weakness. Because if the dollar Canadian breaks above those levels, above that resistance, it's going to make me feel a little bit more comfortable about being short the Aussie. And then, I don't know if I'm willing to add to my Aussie short exposure yet. Because I feel that that with stocks as strong as they are, it's a hard argument. But if equities are moving lower and the dollar Canadian is moving higher, then and I saw stocks moving lower again, that would maybe convince me to add a little bit to my Aussie short exposure, which I'm short at like 64.03. So it's not, it's around these levels. I just don't want to be too aggressive because of how well risk appetite is holding up. One last thing I wanted to talk about, actually, because it's on my mind, is the dollar yen. Dollar yen is extremely weak. The better trade, and I was thinking about this, and I'm not in it, but this is, maybe the better trade versus being long the dollar Canadian, is being short Canadian yen. Because if you look at the Canadian yen has really struggled with this entire rally. Here's the 4-hour chart. We're at the 78 level resistance, 74 level support, 74 yen. We're near the upper end of this range. It's like, okay, if I'm not going to trade the dollar Canadian on the long side, maybe the Canadian yen is a better short. The yen has done very well in this environment, and which is surprising. So if, if stocks do start to come off a little bit, maybe the dollar yen breaks through this, 107. And I get irritated every time I look at this chart because I know I needed to be short up here, right? Up at, near 109. And I just sat here and watched it bleed the whole time. But, maybe the better trade is being short the Canadian yen is what I'm thinking. But that has to be, it has to fall in line with stocks moving lower, dollar Canadian moving above 120, 139.30, et cetera, et cetera, et cetera. There's a lot of conditions that need to be met for me to be, shorting the Canadian yen. But that's something that I am really, strongly considering at this point. If you're listening to this after the fact, after I've done this live, because the people that are listening live right now are the ForexAnalytix subscribers. If you are not, then you need to make sure you join ForexAnalytix. It's only $1 for 10 days to try it out. When you do that, it doesn't matter what version you're using, premium or light. You're going to get the premium version while you're trying us out. So make sure you download the mobile apps too. All right, guys and gals. Hey, I want to thank you all for being here. And by the way, gold still looks strong. It's very divergent, but I think that's one of the places where investors want to be is long gold. All right, guys. I'll talk to you in the chat room. Thanks, everyone. Bye-bye.